Alrighty, everybody, what is going on? Welcome back to another CYPRX fundamental and technical analysis update. In today's video, we're going to be thoroughly reading through our private community reports that keeps our community members in the loop with what's going on in real time via the market sentiment. It's going to cover for you all today why risk assets across the board were relatively suppressed, why we saw an outflow in the total cryptocurrency market. It's going to tell you all what to be mindful of heading into the weekend and what to pay attention to next week. And then we're also going to thoroughly give you guys an update in regards to the technical analysis that we've been tracking accurately for you guys on XRP and Canton. Shout out to those of you all individuals who have thoroughly enjoyed these updates. We do appreciate the recent love and support that you guys have been giving and the positive feedback. So we're going to continue to give you guys these updates. Don't forget that at any point in time, if you guys want these accurate updates in real time, the fundamentals, the reports, the technical analysis, institutional dark pools, and deltas given by our institutional software and tooling, you guys can always head over to CYPRXtrading.com. You guys can gather these real insights yourselves instead of watching these video breakdowns days or hours after we create them. And instead, you can have these insights in real time when they matter most. We'd love to have you on the team. With that being said, let's first break down the fundamental report so you guys understand the landscape in which we're operating in and what to be mindful of moving forward. So, March 6, 2026, this report will remain relevant, relatively speaking, all throughout the weekend until Monday. So, if you're watching this after Monday, we will likely deliver another update heading into the week. Today's pressure across crypto is coming from a collision of weakening growth signals and persistent inflation risks, which is one of the hardest backdrops for risk assets to rally in. The total cryptocurrency market is down roughly $70 billion on the day. And while price is still holding above the $2.3 trillion dark pool for now in the total crypto market cap, the market is drifting dangerously close to the monthly low near 2.23 trillion. That matters because as long as crypto remains trapped in this zone, sentiment stays fragile. A clean break below that monthly threshold would likely increase concern that this is no longer just a healthy pullback, but the beginning of a deeper risk off repricing. The biggest macro catalyst today was the labor market shock. February's jobs data came in much weaker than expected, with non-farm payrolls printing negative 92,000 against expectations for a plus 59,000 reading, while private payrolls fell negative 86 versus expectations for plus 65,000, and manufacturing payrolls dropped to negative 12,000 instead of rising. On the surface, weaker labor data should be supportive for crypto because it increases the chances of Federal Reserve rate cuts later this year. Now, we know that markets did move to price in better odds of a June rate cut after the report, and you can see that here. However, the problem is that it was not a clean dovish report. At the same time, the labor market weakened, wage growth remained firm, unemployment ticked higher, and participation slipped. That leaves investors worrying not just about slower growth, but about the possibility of a stagflationary backdrop where the economy softens while inflation pressures remain sticky and troublesome. That inflation concern is being amplified by geopolitics. The US Iran situation continues to inject major uncertainty into global markets, especially through the energy channel. Oil and gas prices have jumped, and that is keeping traders cautious because higher energy prices can spill into headline inflation and pressure consumer spending. Even though some Fed officials have suggested the oil move may not necessarily create lasting inflation, they have also made it clear that they are not ready to rush into rate cuts off 1 week jobs report, especially with inflation still above target. That leaves markets in an uncomfortable middle ground where growth is weakening enough to scare investors, but inflation risks are still high enough to prevent the Fed from riding to the rescue quickly. Here are some reports from Federal Reserve speakers that dropped today. Several Federal Reserve officials commented on today's weak jobs reports, and while they acknowledged that the data was disappointing, their overall message was that one report alone is not enough to change policy yet. Chicago Fed President Austin Goolsbee said that the payroll miss was a tough one, but emphasized it would only become a serious concern if the economy begins producing several months of similar weakness. San Francisco President Daly echoed that sentiment, saying the report has her attention but warned markets not to make too much of a single month of data, especially while inflation is still running above the Fed's 2% target. Meanwhile, Fed Governor Christopher Waller noted that the Iran conflict and rising oil prices are unlikely to create sustained inflation, although a prolonged conflict could eventually have a broader economic effect. Overall, the takeaway for markets is that while the weak labor market data increases the possibility of rate cuts later this year, the Fed is still in a wait and see mode, meaning risk assets like crypto and equities may remain sensitive to upcoming inflation data, oil price movements, and whether additional labor reports confirm that the labor market is truly weakening. That is why crypto is struggling despite weaker jobs data. Normally, a softer payroll report would help risk assets by boosting expectations for easier policy and a weaker dollar. But today, the market is interpreting the data through a more cautious lens. Instead of seeing only rate cuts, investors are also seeing economic deterioration, sticky wage pressure, rising oil prices, and geopolitical instability, and no clear visibility on inflation. Add in the fact that there have been no meaningful easing developments on tariffs and no real resolution on the geopolitical front. And it makes sense why traders are reducing risk heading into the weekend rather than leaning in aggressively bullish. Going into the weekend, what we need to be most mindful of is headline risk. Any further escalation between the US and Iran that is not priced in, any threat to energy supply routes, or any renewed spike in oil could keep pressure on crypto and broader risk assets. When markets head into a weekend with open geopolitical uncertainty, traders often prefer lightening positions rather than holding heavy exposure through 2 days of headline risk. That caution alone can keep sentiment suppressed, even if the market is technically sitting on support. For sentiment to improve, the market needs a few things to change. First, crypto to defend the $2.3 trillion dark pool and avoid losing the $2.23 trillion monthly low for March, because holding those levels would show that buyers are still willing to absorb the macro fear. Second, markets would benefit from any credible sign of de escalation on the Iran US front, because that would likely relieve some of the pressure in oil and help calm inflationary fears. Third, we need inflation data this upcoming week to come in controlled enough to reassure traders that the Fed still has room to cut later this year without being trapped by resurging price pressures. And finally, any easing in tariff uncertainty or softer rhetoric from policymakers would help bring back confidence that the macro backdrop is shifting away from stagflation fears and back toward a more supportive liquidity environment. So, the big picture is this: crypto is not down today simply because jobs were weak. Crypto is down because the market is being forced to price in a more complicated macro environment. One where growth is slowing, inflation risks are not gone, oil is rising, the Fed is cautious, and geopolitics remain unresolved. Until those pressures begin to ease, sentiment is likely to stay fragile. But if support holds, inflation data behaves this upcoming week, and geopolitical tensions cool, the market could still find room for a relief rally once this wave of uncertainty starts to clear. So now that you guys understand the current fundamental backdrop, next week we have a whole bunch of inflationary figures. We have the PCE figures. We have a bunch of data. So make sure that you guys are following us over on X, as we will make sure to give you guys updates in the coming days ahead. Coming over to our X profile and just taking a look at our last XRP analysis before we get into the TA. We mentioned that to the downside, if sentiment were to worsen, the first key support would sit at $1.34. We mentioned that confirmation is still needed regarding any real de escalation between the US and Iran to see a sustainable market rally, and that markets would also be watching the rest of this week for key economic releases like non farm payrolls, unemployment data, and inflation expectations, which could all influence the broader sentiment across crypto and trading markets. So now, fast forward to what we're seeing today. We're seeing those headlines weigh on market sentiment. Also, in our last Canton update, we had highlighted the 14,801 cent psychological level as our most immediate bearish target. You guys can see that here in this most recent update. Both $1.34 on XRP and the 14,801 cent psychological level has accurately come into fruition. Heading over to the XRP charts first, just to give you guys a quick update before we head into the weekend. Again, if you all enjoy these accurate updates, no crazy, sporadic, speculative price predictions, taking this level by level for you guys, keeping you on the loop. And if you all have been paying attention, do us that favor, smash that thumbs up button. Subscribe to the platform. We do appreciate the love and the support, as it does help boost the algorithm and push these videos out organically to more individuals like yourselves. So you can see that we held resistance at the sell wall that we had mentioned in our previous post. You guys can see We said that there is a sell wall that sits at $1.43. And in order to see price break higher, we would need to see that sell wall turn into support, and we would need to see momentum gain above that level. We did not see that happen over the week. And instead, we are seeing the sell wall act as a resistance, which has now allowed price to trickle back down into $1.34. So right now, $1.34 remains our most immediate support. With that being said, going over the bullish scenario first. As long as we are above $1.27, which is where the daily buy wall still sits, there's a small, tiny little daily institutional buy wall at $1.27 that also aligns with a buy dark pool at $1.27 as well. So over the weekend, maybe we do see some continued sell pressure, sellers pushing price down back into $1.27, buyers defending this previous buy wall, able to trap sellers, gain enough momentum, and push price back up into the highs. The first bullish hurdle that we need to overcome is this sell wall at $1.43 before I get overly excited about any meaningful recovery or sustainable rally on XRP's price. So if we can see support thrown up at $1.27, turn $1.34 back into support, and make a meaningful break above $1.43, turning that level into support as well, then we can open the door up for a recovery back into possibly $1.62. As you can see here at this $1.43 sell wall, we have seen sellers passively defend this area multiple times. After aggressively breaking $1.43 all the way back here on February 18th, buyers were trapped at highs on February 21st. We had buyers trapped here at $1.43 on February 26th. Same thing, February 28th. Buyers were trapped at $1.43. We almost had an attempt at $1.43 by buyers on March 2nd. And then most recently, the failed attempt this week, Wednesday through today, Friday's price action, March 4th through the 6th. Also seeing sellers trap buyers at $1.43. So this is a clear area that we need to see broken with a sustainable hold above via buyers breaking through the sell wall, turning it into support, becoming aggressive enough to push price higher before we get excited about any meaningful higher prices on XRP. The second bullish scenario I'm looking at right now is if we can hold at $1.43, we can turn it into support right now instead of breaking beneath it, and we can start to make a meaningful recovery back into $1.43 where the same scenario applies. Before we get overly excited, we need to see $1.43 turn into support, and if we can see that, then we can start to consider higher prices. To the upside, if either of these scenarios were to come into fruition and we were to break above $1.43, 162 is the next area of interest where we could possibly see sellers step back in and defend. Anything above 162 opens the door for $1.68 to $1.77. Those are our most immediate upside targets on XRP for now. To the downside, as long as price remains below the sell wall at $1.43, even if we were to come back up into this level, if we cannot see buyers sustainably break and hold above this level, then that still leaves the door open for further downside. We could see a ranging environment for some time where we just bounce in between $1.43 and $1.34. However, if at any point in time we break $1.34, we see sellers sustainably hold beneath 134, trap buyers, and turn it into a resistance, that is going to open the door for a revisitation of $1.27. If $1.27 does not hold as support and buyers cannot defend this active buy wall, then that is going to open the door for sellers to push price aggressively down into $1.18 as our next bearish target. Keep in mind as well that one institutional dark pool I'm paying very close attention to is 91 cents. However, right now we have recently had some updates inside the private CYPRX Discord. So just showing you guys those levels, you can see that the lowest level buy dark pool that pops up on our radar is not 91 cents anymore. Down here to the right-hand side, you can see that it is actually 69 cents. But underneath of that, we also have some buy deltas highlighting at around 44 to 51 cents. We're going to take this level by level. We would, of course, need some type of extreme catalyst to take us down to those lower levels, like the unraveling or the unwinding of a yen carry trade, especially if the Japanese finance ministers were to intervene with the currency and we were to see aggressive spikes in yen price appreciation. That could negatively weigh on risk assets like XRP, and we would likely see a cascading event across global risk assets, including crypto, that would create massive liquidations and send XRP down to those lower level targets. But for now, just so that way you guys have them on your radar, 91 cents is the next dark pool underneath $1.18, and underneath of 91 cents, 69 cents is on our radar. I'm sure that we'll have updates before any of those targets come into fruition, so just be mindful. And then you guys can see some of these upside targets as well, but we stopped in regards to this update at $1.77. We have some key hurdles to overcome before we reach anything higher. As for Canton, Canton has held relatively sustainable, in my personal opinion. We're still holding above the 14,801 cent psychological level. If you all remember in a previous update, I highlighted this spike down that happened into 14,801 cents on MEXC. This spike down did not register on any other exchanges. Now you can see that price has retraced down into the 14,801 cent psychological level, and you can see a nice, decent bullish reaction from that level as we record. However, that does not mean that we are out of the deep waters for Canton yet. And in my personal opinion, a deeper retracement is still on the table. That being said, bearish scenario first on Canton. If we see sellers engulf all of the buyers that exist at 14,801, we see them trap buyers at 14,801 on the retest and turn it into a resistance. That is going to open the door for a drop down into the 12,257 cent dark pool before we could possibly see buyers step back in. Anything worse than 12,257, which I'm sure we'll have another update before that level comes into fruition, we still have on our radar the 09453 and the 05800 to the downside. Worst case scenarios as well, I still have lower level targets where I will be buying a lot of Canton because people will probably be calling it a scam if this did happen. But if we did clear the 058 cent psychological level and we rolled into these lower level dark pools at around 02602 cents, and worst case scenario, we did have an institutional dark pool pop up at the 0.0001 cent psychological level. So just keep those levels on your radar as well, but I'm sure that we will have an update before those materialize. So for now, anything under 14,801 opens the door for our next bearish target at the 12,257. To the upside, if on Canton, we can see buyers defend either of these two levels, whether it's a drop down to the 12,257, buyers trap sellers, defend this level, we can break back above the 14,801, then that would open the door for a meaningful recovery back into the 18,194. If we can see buyers hold sustainably above the 14,801 from where we're currently trading at, turn it into support, break through this current consolidation that we saw in between 17.5 and 15.5 cents, that would also be a case for recovery on Canton to start to target the highs at the 18,194. And if sentiment does recover sharply and we do see a risk on environment and we break above the 18,194, turn it into support, our most immediate highs need to be engulfed at the 19,214. If that happens, that would be a case for recovery up into higher level sell dark pools. The next levels have not changed. Our most immediate upside target is 22 cents. Above 22 cents, we still have that highlighted area at 26 cents on our radar. So now you all have both immediate downside and upside targets on XRP. Make sure that you guys are setting alerts and alarms to keep yourselves updated, as we've been trying to give you guys these updates almost every other day, if not every third day, depending on the market sentiment and the market fluctuations. But again, we give our private community these updates every single day. So if you want to stay in the loop with the updates in real time via our institutional scalper, you guys can head over to CYPRXtrading.com. He's updating our private community members ahead of the curve in real time all throughout Asia, London, and New York session. Many blessings to you guys. We hope to see you all on the inside. If you all enjoyed this realistic update, do us that favor, smash that thumbs up button and subscribe. No hopium, no hype here. Real fundamental analytics and real institutional insights inside the private CYPRX community. We'd love to have you on the team. With that being said, blessings to you all. Be cognizant, be aware out there, and I'll see you guys in the next video update.